Hi everyone, welcome to the fireside chat. I'm here with Mona from Enzyme Finance. Enzyme is an on-chain asset manager and framework built on Ethereum. I'm here with Mona, who's the founder, who we've known for a long time. Welcome, Mona.
Hey, Ross.
So rough agenda for today is really informal, just a fireside chat, kind of catching up on what Enzyme's been up to over the past year, your explosive growth, your thoughts on the general Ethereum ecosystem, delving a bit more into some of the pain points and some of the challenges that you've overcome, and then just kind of wandering on to the future of on-chain asset management and layer two if we have time as well. We've got a bunch of really good questions from the Discords and Telegrams, so we'll see how much we can get through in about 30 minutes, if that sounds okay.
Sounds fun. Let's get started.
Excellent. So maybe if we just start off with an introduction, yourself and Enzyme, where you've come from, where you are at the moment, and then go from there.
Yeah, sure. So I guess I come from a very traditional finance background. I spent first kind of nearly 10 years of my life as a market maker and prop trader at Goldman. After that, I went to work for one of Goldman's bigger clients, a sort of long-short equity hedge fund for 4 years. And I ran a part of their portfolio. And then the big move for me after that was to try and set up my own fund. So I had a $20 million seed investor, and I thought, okay, it's not a lot compared to what I've been used to managing, but I want to have a go anyway and try to build out my own business and see if I can make something of it. And that year of my life turned out to be one of the most stressful, worst years of my life. It was a real shock to me to discover the inefficiencies in the traditional finance industry. I mean, I sort of had always been front of office with operational and administrative support backing me. But as a small kind of fund manager, I had to do it all myself. And, realizing in practice what it meant that all of these processes were so inefficient and having to do them myself was quite shocking. Very exhausting and very distracting from what I should have been doing, which is managing investments and looking after people's capital that had trusted me with their money. Anyway, after a year of that, I decided that this wasn't really feasible. I wound down the fund and tried to take some time off. And I did try to take some time off. A year didn't quite happen, but a couple of months into my year off, I read an article about Bitcoin and then Ethereum, and then I sort of got hooked. And then I sort of saw that it was all happening back in Switzerland, where I still had an apartment there. And I decided to get on a flight and immerse myself into Crypto Valley. And ultimately, I guess the vision or the strong conviction that I had in early 2016 was all assets will eventually become digitized or have a digital share class. And if that assumption holds true, then we can build a way better infrastructure, which automates all the operational, administrative, compliance. When I say compliance, I mean kind of the trust issues between investors, managers, buyers, sellers, etc., through smart contract code. And that was really the beginning of the journey. I guess it was DeFi in its infancy, although we didn't call it DeFi back then. That was a term that came up like 2 years later.
Amazing. Yeah, you were one of the first projects that I encountered in 2017, I think it was. My background is traditional finance as well. So it's been a similar sort of framework, running a sort of fund trading environment, lots of inefficiencies in the back office. And when I sort of was delving into crypto all the way back then, your project was one of the first that I encountered, and it immediately resonates with you, being able to build trust and also remove trust and also remove those inefficiencies for something which could be as huge as asset management is just amazing. I'm really keen to find out a bit more about the protocol and the changes that it's been through. Would you be able to give an overview of Enzyme itself, where it started, where it is now? That'd be really good.
Yeah, sure. I didn't know that about you. It's nice to know that you were kind of following us from back in 2017. So, yeah, I think that the easiest way to kind of describe Enzyme formerly known as Melon, is we aim to be the asset management infrastructure for crypto assets. So what does that mean? I guess we serve two types of users: the sort of users who want to create and manage vault strategies. So people who have ideas on, or people who are good at managing crypto or DeFi related assets. So giving them the infrastructure to quickly customize a vault, set up a vault, customize it in terms of what fees they can charge, what investment restrictions they want, what redemption restrictions they want to have on it, what risk management parameters, if any, they want to impose on it, etc. And you can basically customize it without necessarily being a developer and deploy a vault within 2 minutes. It's just one transaction you need to sign and you deploy it to Ethereum. Once you deploy that vault, from that vault, you can now accept deposits. You can pool capital, you can pool your capital and other people's capitals together to execute in batches, which is obviously very convenient in this world of high gas prices. You can manage, predetermined strategies like yield farming strategies. You can access AMM pools. You can access DEX trading aggregators, and you can deposit into, I don't know if I said it, AMM pools. And lend and borrow soon as well. So the Vault Manager has like a space where you can think of it as a one-stop shop for DeFi, where you can access all the DeFi functionality from one place, and the contracts take care of accounting. So you have live real-time accounting in terms of your NAV or your performance. You can track the fees you're earning, if any. You can claim the fees, so the protocol takes care of calculating and distributing the fees. You can see your assets under management. You can kind of do all sorts of analytical things like quickly determine what your Sharpe ratio is, etc., etc. And those are all things that in the traditional world would cost you a ton of money to have in real time or even like delayed time, and the cost stacks up very quickly, and often there's a very big lack of transparency. So you can't even, if you suspect the number is wrong, it's very hard to get to the bottom of why it's wrong. So that's the Vault Manager use case. Like, we help accelerate small to medium-sized managers, because there's virtually no cost incurred in deploying a vault to the mainnet and managing it. For investors or for depositors of the protocol, they can, DeFi is like a full-time job at the moment if you want to stay on top of everything happening. And people want access to DeFi, but other than some very basic kind of index-based products, like there is basically there's no way there isn't really much of an easy way to access DeFi, and that's what Enzyme is basically proposing to do. Like, you can come in, you can filter as an investor based on certain criteria what you're looking for. A minimum track record of 6 months, like a minimum of investment performance of 15% over 6 months, or whatever you want, and it kind of narrows down the choices for you. And then you can basically have a look at the remaining choices and say, okay, that's something that looks interesting. You can contact the manager. You can potentially deposit with them or have a conversation with them about how to get involved. And the benefit of that is, managing your own money. If you have nothing, if you're good at it, and if you have nothing else to do, that's a great use of your time. But if you have a full-time job, like staying on top of the DeFi opportunities and which protocols are good, which high yielding, where the opportunities are, where the traps are, is very difficult. So being able to delegate that to a third party and just paying them a small fee to manage your assets or to execute your assets on your behalf is a much easier way to roll.
That's what I love about it. From the investor's perspective, it's very much a set and forget. You can filter all of the funds. You can pick the one that you like. You can check the track record. You can have a look at the assets that it's investing in at the moment to check that they are doing what they say they're doing on the front page. And you can also really easily see all of that, the sort of stuff that you might not particularly pay close attention to, like the management fee, the performance fees, all the calculations that go on behind the scenes. And then I think one of the really interesting things is you've also got the ability from the manager's perspective to be able to you forgive me with the technical term for it, but you can actually set the limits on when people can put money in and take it out of the fund as well, right? So it's basically a huge amount of flexibility.
Yeah, that's a feature we're going to have soon, actually. But yeah, that's definitely the way. Yeah,
absolutely amazing. And so I guess, big question, 2017 to now. So Enzyme, the protocol now has about $26 million in total lock value in all the pools. So it's really kind of exploded over the past 12 months or so. Was there any particular...
Actually, 3 months. I would say all the growth pretty much has been from the last 3 months. The majority of the growth. I think we were at 3 million in January this year, and we're sort of now at around 26.
And what do you think was or if you could pinpoint the sort of, aha moment, or what was the real turning point for, not only Enzyme, but also was it a particular, the section of the industry? Was it a particular moment for on-chain asset management, or was it Enzyme in particular? And if it was, what was that? What were the range of factors that kind of contributed to that explosion?
I think a couple of things probably. So I think our V2 launch came at the end of January, and I'm not sure, Ross, how familiar you are with the V1 product versus the V2, but basically V1 was very limited in its functionality, and it was clunkier and much harder to use. So we, I think at the time when we launched, it was a great asset management. It was the best asset management infrastructure there was at the time. That was in February 2019. But DeFi was moving so fast at that point that it hadn't architecturally, we hadn't priced in the need to accommodate for lending and borrowing. We didn't know what that would look like when we started building the V1 architecture, derivatives, synthetics, AMM pools, all of that kind of stuff, which kind of exploded, around the time of our V1 launch. So very quickly, it was looking quite clunky. The user experience was terrible, frankly. The software was just very clunky, difficult to use, and limited in functionality. And so, we didn't really get, any users in the first year or two. And we spent most of last year, from March last year until the end of last year, basically re-architecting everything from the ground up and building it in a much more modular, extensible, and flexible way. We're really happy with where V2 is now, and I think that the growth in TVL or AUM kind of speaks for itself. But basically, the V2 launch, I think, raised a lot of eyebrows. Like the protocol is much easier to use. It's much less gas intensive compared to V1. It's able to handle, aside from DEXs and DEX aggregators, it's also able to handle synthetic products. So we're integrated with synthetics. We're integrated with lending protocols like Aave and Compound. We're integrated with AMM pools. You can deposit into an AMM pool and receive the LP token, and that can all be accounted for. You can also, you have what we call a rewards page, which is basically a page which can manage all of your farming from. So, with Compound, for example, you're earning Compound tokens simultaneously. And I think that since we launched that, everyone was, you also probably familiar with the rebrand happening at around the same time. So that kind of freshened up the look. There was a new UX UI, which I think looked a lot sexier than the previous one. And basically those combination of factors led to, we'd been talking about it all year last year. And I think people were a little bit surprised when we actually delivered it, because it's unusual that people deliver things kind of on time in blockchain space. And I think that once people started using it, the kind of functionality and the improvements spread just by word of mouth. And a lot of the people we'd been speaking to last year, almost didn't believe it at first, and kind of we kept telling them we're going to launch in Jan, so hopefully you're ready with your vault and ready to go with your strategies. And when we actually launched, they were like, "Oh, we didn't actually think you'd be ready on time." So now they're like rushing to like get their strategies and their, things ready to launch, etc. So we're very excited about the growth we've seen so far, but we're also I think there's still a lot more to come.
So I guess the summary might be, DeFi exploded last year, and there was a lot of extra tools and things to play with. So a lot of the products that people can trade now on Melon are there, and they're very liquid. AMM, synths, yield farming, and that was what you were able to bolt on top of to make the range of products a lot greater. But also then the interface was just a lot simpler, less clunky, easy to use. So that's very much on the product side. Has there been any attitude change towards on-chain asset management or Melon or anything like that? Or has it very much just been the product?
I think there has been. I think another kind of actually important factor as well, which I forgot to mention, is when we launched V1, there weren't really many reliable price oracles around.
Yeah.
We really were that early. And basically, we used Kyber as a price oracle for V1, which really limited us in terms of the asset universe, because, using it as an oracle, it comes with risks, and to minimize those risks, we had to reduce the universe of available assets within Kyber that we were comfortable with. And now we've moved to Chainlink, and we've actually also got a much more flexible price feed architecture, where in theory we could slot in different price feeds, and managers could actually be the decider on which oracle they want to use. So we've started with Chainlink, but actually the possibilities are endless. So we went from an asset universe of 15 assets to, I think we're well over 200 now. So that gives you a sense of like the explosion of possibilities that have become possible for people as well.
People can really run sort of multi-strategy funds instead of just the simple stuff.
Yeah, and another like really big feature we're working on now, it's probably consuming most of this month actually, is we have the lending capability, but obviously wouldn't be DeFi complete if we also didn't have borrowing capability. That comes with a lot of thought that is required, especially on the risk management side, and how to handle or how to manage/handle your collateral. And we're working through that now and hoping to have that bundled up and included in the Zulu release.
Amazing. And have you seen attitudes change towards on-chain anything, or and in particular Enzyme? Because I've definitely noticed a big surge in people who are more willing to get involved in DeFi over the past year. I think we're at 400,000 active daily wallets now. Has there been a big change in terms of people who are willing to have a go at on-chain asset management, or was the kind of the attitude always there, the people were always there, but it was really the tooling and the infrastructure that wasn't allowing them to kind of deliver on what they wanted to do?
I think it was probably a mixture of both. I think we definitely had a lot of interest last year, but people were like, okay, well, we're just going to wait till V2 because V1 doesn't solve all our problems. So that we had that, we have had and are having that influx now. And then the other thing is this change of attitude. Like, we've definitely seen the change of attitude, and it's also very visible in the community. I would say for a year was pretty stagnant, in the sense that it was always the same voices. And I think, maybe like a just kind of side anecdote, but like our Twitter followers stayed at the same number for the entire year. And then in the first 3 months of this year, we saw like big, a big jump up again, which just shows you that I think not only have attitudes changed, but also, it's not because we changed anything on the marketing front. It's just because I think attitudes are changing. DeFi is becoming more talked about. People are curious, and I think word of mouth is also kind of like spreading quite fast, and people are interested to try it out and have a go.
On that word of mouth piece as well, over the past couple of months, there's definitely been some high profile funds set up on Enzyme, and quite a few high profile people holding Melon token as well. Can you just run us through a couple of those, and the discussions that you were having, and why they chose now, etc.? I think that'd be really interesting for everyone to hear the inside story.
Yeah, so I think the most recent one that you're probably referring to is the Defiance Capital announcement we made a couple of days ago, and that's that was really cool to see, actually. So Daryl, one of the kind of analysts at Defiance, kind of plays around with a lot of the DeFi protocols himself, as you should if you're investing in them. And he was, I think he stumbled across Enzyme, and as he does with most things, I think gave it a try and was kind of blown away by two things. A, like the fact that it had so much functionality, and B, by the fact he'd never heard of it before. And so this led to two things. Obviously he's now looking after one of the larger vaults on the protocol. And the second thing is, they wanted to get on a call with us and find out more about Enzyme, the development. And the other interesting thing about them, which I thought was very interesting and cool, I think, was that they were in particular interested in, and they emphasized this, I think, interested in projects that had survived the bear market.
Mm-hmm.
I think that
builders.
I think that the way they saw it is like, if you could survive the last 2 years, in terms of that crypto winter, then you can probably survive a lot more.
And where are you seeing the growth in the vaults on the platform come from, in terms of both TVL and new asset managers? Is it people who are big DeFi traders who now can actually finally have a mechanism for proving that they can beat the market, or is it more traditional asset managers who are coming in perhaps through Mana or other places, or is it a big mixture? And where do you see the growth, do you think, over the next couple of months and years?
I think I'm smiling because I'm actually quite proud of the answer, but I think it's actually from everywhere. And I'm talking about the visible TVL today and the TVL that's in the pipeline that we suspect is coming. There's based on conversations we're having, etc. But I'm very happy to say I think it's like, we always aim to be an asset management infrastructure. Like we don't care if you use Enzyme to build ETFs or to build, collective execution strategies or vaults like the Yearn type vaults, or if you use it to build active management strategies or robo advisory. Like we literally, our only goal is to give you the tools to build whatever kind of asset management product or execution product you like. It could even just be your own account. Like it doesn't even have to manage third-party money. And so the fact that we're seeing all of this interest from so many different angles, for me, is like almost like a validation that we've built. The team have built like an infrastructure which is really living up to its goal of being flexible, extensible, and easily adaptable.
That's what I've noticed as well when I was on the platform, especially the changes from V1. There's just so much flexibility now. You can really do anything. It's not just a front end to an asset management system. It's actually you can go anywhere, do anything. It's a protocol. You can interact with it in lots of different ways, which I think is really awesome. So it's great to hear that the growth is coming from the whole spectrum and not just one small corner of crypto, which I think is fantastic. I guess moving on to some kind of harder questions now. So, like you're saying, us as well at DeversiFi, we've been in the industry since 2017. It hasn't all been plain sailing, and a lot of the growth has come in the past year. But what are the main kind of friction points that you see at the moment in both, the industry and Enzyme itself, and what are you working on to address? What are the main kind of friction points in terms of either the protocol or the customers or anything like that? I think that'd be really interesting to hear.
I think the friction point, probably the biggest friction point at the moment for the industry is the gas price. Gas prices. People trying to get creative in terms of how they can reduce gas on the protocol level. You've seen some of the recent various V3s announced by people where the focus really is on bringing gas costs down, which luckily we had done already a lot in our V2. But still, it's the friction really is on the trading side, I think, more than anything else. I guess So I think it's fair to say that that's probably impacting everyone. In terms of Enzyme specific, I think we have a slight advantage there, because you can pool executions with Enzyme. So in theory, if you collectively as a group all agree on the same strategy, you could actually pool your capital together and actually execute it, based on that pre-agreed strategy, and actually share in all the gas costs. It's actually a little bit difficult to do on V2 right now, because the way that gas is expensed, it goes out of the manager wallet. And this is actually a really big improvement that we're putting into this next release, which should be out in 3 or 4 weeks, or we should go to audit in 3 weeks, sorry. But the idea is that people will be able to expense gas costs back to the vault. And so that removes even more of the friction. But the idea that you can now share it, across, with friends, family, or, like-minded people, I think puts us in a much better position in the high gas cost environment. But it's still probably, higher than we would like even.
Sorry, just so I understand that. So the vault manager is able to share the gas costs with anybody else, or is it the actual people who are depositing to the vault that share the gas costs?
So today, the vault manager would incur the costs of trading. But let's call it tomorrow, but it's actually probably more like next month. Starting next month, the person who incurs the cost will be able to expense it back to the vault. So it's actually actually by investing into an Enzyme vault or depositing into an Enzyme vault today, you can actually you're actually not paying anything for transaction costs. You're just paying a standard fee that you would pay. But starting kind of next month, you'll be sharing those costs. So you could in theory create a vault that has no management fee, no performance fee, but actually you just share all the execution costs, and then that's a way to get around the high gas cost environment. So
it's kind of like a gas aggregator almost, where there's a predefined strategy. Everyone can deposit into the vault at a low gas point, no weekends, and then they can kind of set and leave the strategy running, and then the manager just executes the trades all in one go, and it means that the gas cost is socialized instead of being paid by the individual, which is great. Similar to kind of like a Yearn vault or all those sort of strategies as well.
Yeah, exactly. Yeah.
And then don't you have a gas subsidy program at the moment as well is it Paraswap? Is that right?
Yeah. So that's a really cool story as well. Like Paraswap launched a gas subsidy program. I think it was for a week in February, and they completely off their own initiative decided that the subsidy would be paid in MLN token. And we thought it was a really nice initiative of them, and the fact that they did it in MLN token, and the fact that obviously we use Paraswap as an aggregator within Enzyme. And then I sort of noticed that it was getting a lot of attention, and I sort of thought, until we have the gas subsidy feature, maybe it would make sense to try and pitch to the council that gas subsidies would be helpful during this period. And so we pitched it to the council as an experiment to try it out for March. We'd also seen other similar projects like Balancer, and I think there was Paraswap obviously have launched gas subsidy programs with some evidence of success. And so we decided to do it as an experiment in March. And obviously in March the TVL did increase substantially. And I looked at the trade data, and it's difficult to say where the growth came from, because the assets under management were increasing, but also the assets under management could also have been increasing because of the gas subsidy. So it's kind of hard to have really clean data on that. But the trades, the frequency of trades increased by 240% in March, and so we've extended it. The council have agreed to extend it now another month.
Amazing
evidence, yeah.
Amazing. And just to pick up on that, so the council you're referring to is the Enzyme kind of technical council, which is elected members, of which Will, the DeversiFi founder, is a member of. It's been a member of for a couple of years now as well. So And a really good bunch of technical industry people who are advising on all the protocol changes and governing the protocol as well, right?
Yeah, so there's the Enzyme Council is made out of the technical representatives, which are made up of people like Will, like Lev Livnev, Nick Munoz, McDonald, Martin Lundfall, Paul Salisbury. So we've got some really well-known people in the space that take OPSEC really, really seriously. And then on the flip side, we also have user representatives, and we introduced a user representative segment quite recently because, as I mentioned earlier, we didn't have users until recently. But the user representatives are made up at the moment of they were nominated by the users, and they have to show that they are users on the. I think the threshold is they have to have at least 1% of the assets under management on the platform to be eligible, and then they have to be nominated. So we get a short list from that, and then they're nominated by the other users. So Felix Hartman and Gilles Detienne are now on the user representative side, and they handle things like, lobbying for, where users want to spend their, think we should be spending our time and resources, etc. The technical council, like, they vote through all the protocol upgrades, they vote through the, the tokenomics changes. Their goal is really like, all the technical stuff, basically.
That's amazing. It's amazing to hear about the gas subsidy program as well. Definitely seen some evidence of that in various places, like you were saying, Balancer. We DeversiFi, so we're a layer 2 exchange. Then the friction point for us at the moment mainly comes from onboarding and offboarding customers from the L1 to the L2, and on peak times that onboarding fee can be quite high. What we're trying to discuss with and kind of get the message across to people is that you need to keep funds on layer 2 to be able to then use them when things are going crazy, because by the time gas fees have got too high, you can't really move your assets on layer 1 anymore, and you definitely can't execute because you've got all these front running problems and everything. So we introduced a gas subsidy program where we were paying users about $30 in USDT when they first deposit to the platform, and just that small change really helped people on board. So I definitely think that gas subsidy programs are the way to go. Right. Yeah, and I guess
how often are you guys now? Used to think last time we spoke it was every couple of hours, but how often are you kind of rolling up?
Yes, definitely. You've touched on a really good point there. So yeah, for everyone, so DeversiFi is a layer 2 exchange. The idea is we can batch transactions together, so we can achieve this very high transaction per second, which is abstracted away from the main blockchain, and that's how we scale. We use the Starkware ZK rollup or Validium technology, as it's known. And one of the pain points that we faced is because we need to put a batch on chain at some point, the gas costs are also impacting us. So at the moment, it costs a few $100 to put a batch on chain. So this time last year, we could put a batch on chain, every 10 minutes or so. But now we're doing one every few hours or even once a day. But actually, we've kind of overcome that, as I was saying, on two ways, on the deposit side and the withdrawal side. On the deposit side, by subsidizing deposits on the platform, which is helping people onboard to layer 2, and then hopefully they never need to leave. But if they do want to leave, we're actually just launched a couple of weeks ago a fast withdrawal mechanism, which means that instead of waiting for the batch before users can withdraw from the platform, they can actually get their funds straight away on layer 1, and we kind of front them the tokens until the next batch. And eventually we'll be expanding that so that anybody can actually lend into that fast withdrawal pool, so that when people want to withdraw, that pool will become more utilized, and then more people can deposit to that pool, etc. So it's really cool. And we're seeing actually most people prefer to use the fast withdrawals. It's only a little bit more expensive than a regular withdrawal, so maybe that's why. But yeah, that's been a real kind of point that has helped us grow, because now people know they can get their funds back when they need it. But actually, that's probably a good segue into layer 2 in general and scaling in general. I mean, one of the bits that you just spoke about is that gas fees are harming or a friction point, and not just you, but all projects on Ethereum right now. Have you thought much about how that's going to play out, scaling strategies, etc.? I'd love to get your thoughts on what you're looking into and all the stuff that you've thought about with the technical council, the inside story.
Yeah. So we remain very focused on Ethereum for the moment, but we've definitely done our some research on all the layer 2 solutions, and we've also looked at some of the yeah, we've spoken to teams like yours. I think you were not on the last call when I spoke with Will and the team, but we've been doing our research. I think in terms of like how Enzyme could be compatible with something like DeversiFi, I think the conclusion from the call was the moment we don't have vault share transferability, but that's something that will be included in the next release. And I think once vault shares can be transferable, that opens up a ton of new possibilities. So for example, someone who launches a vault on Ethereum can have access to kind of all the available assets on Ethereum, the risk management, all the tools that Enzyme gives them. But then the vault tokens themselves can be traded in a much more gas efficient way on a layer 2 solution like DeversiFi. So if somebody wanted to, for example, launch a big product and could pre-fund it, they could basically create liquidity for it on DeversiFi, and basically people could just trade in and out of that product there. Sorry.
I think that's really exciting, and that's one of the, I think, real benefits of the particular layer 2 solution that we're operating on. We can actually bring, I'm going to call them LP tokens or vault tokens to DeversiFi, have them available for anybody to buy or borrow or whatever on the layer 2, and which means that people can actually access strategies of strategies almost within the layer 2, and you can have those LP tokens traded anywhere. They can be on our layer 2 or any other solution as well. I think that's a really cool way to do things.
Yeah, and I can imagine that being possible very soon, and that's probably the first step that we will make towards layer 2.
That's awesome. So good to hear that you're built, very focused on Ethereum as well, because we're seeing lots of projects, leap around and try different things out, which I think is completely fair. But we know that there's so much being done in Ethereum in terms of scalability. There's just so many options that are going to be available over the next couple of months. I mean, we're building on Starkware, we've got Optimism, Arbitrum, there's Matic, there's Polygon. I don't know if you saw the layer 2 ecosystem map that we put out, but it was actually insane the amount of projects and protocols that are coming up now this year to help scale Ethereum or are building on scaling solutions for Ethereum. So it's absolutely incredible to see. This time last year, scaling wasn't really something that anyone talked about. So it's amazing that in a short year, we've seen like an explosion in DeFi, a validation of the space, lots of people willing to get involved, 400,000 active users on Ethereum a day, and scaling has now really become kind of at the forefront. Very, very, very exciting.
Yeah, and it's from my seat, from our seat, it's been really exciting watching all of these developments happen. I think, I think that the solution, the layer 2 solution I just outlined that we could do with DeversiFi is something we could do quite short term. But longer term, we might want to also explore natively hosting the Enzyme contracts entirely on a layer 2 solution. But I think it's probably too soon to commit or think about that with any conviction yet, just because Polkadot, Kusama aren't even live yet. Optimism, sure, it's been accelerated, but it's not really ready yet. So there's limited options, and I think we'll just have a lot more information in a few months that's more actionable.
Yeah, I completely agree, and I think you've touched on a point that I'm definitely hearing from lots of founders who've been in the space a long time. There's very much there's a difference, first of all, between what's actually live on mainnet and what's promised. So until these things are actually live and have had the bugs worked out, it's very difficult to commit anything in advance. And what I'm hearing from projects is actually they kind of see a separation in customers almost, where you can have your main product on mainnet Ethereum for the security guarantees and the fact that it's been tried and tested, and then you can launch a part of the product on another scaling solution, perhaps because it's got a different kind of customer in mind or a different use case. So I wonder whether we're going to end up with this ecosystem of the main product is on layer 1, but then you've got Melon Light on a roll-up or something, or Melon Institutional or Melon Matic or something. I think it'd be quite interesting to see how that plays out. But I've seen a couple of projects who are kind of going for that approach, because at the moment, there definitely isn't a winner takes all. A lot of the technology is very new still. So I think it makes sense just to keep kind of playing around and yeah, Ethereum's not going anywhere. So
and we keep getting asked when BSC chain. I don't know if you guys are.
Instant ban.
But yeah, it seems to be a question which pops up in the chats a lot recently.
I think that was kind of most of the questions that I had. I know we've got a few more from various places, but is there anything else that you want to talk about before we move on just to a couple of the questions that have popped up?
I'm happy to move on to questions.
Great. So just looking in the chat, what have we got here? That's a pretty deep question there. I'm just reading that one. I'm not sure if we're able to take that. Is there a risk that DeFi technology will simply make the existing structure more efficient rather than actually changing the core economic problem of access, equity, etc.? That's a deep question. Don't know if we want to take that, but I can definitely talk about it from DeversiFi's perspective.
I think the answer to that really is yeah, I'm curious to know what your answer would be, Ross. But I think maybe I've just, I contribute to a lot of the consultation papers put out by FATFA and different regulators, and I think that there is a risk, and the risk is like if regulators and governments start to hinder innovation through kind of stupid lawmaking. Before they have enough data and evidence to regulate sensibly. And I think that bad regulation or trying to put, DeFi in a box of traditional finance regulation would be a really, really, really terrible move, because it would practically, from my reading of the law, the law was created based on a different set of assumptions. And so it would remove the majority of all the efficiencies DeFi promises. So I think if ever that DeFi has to be, when I say DeFi has to be regulated, I don't mean the contracts, because obviously they're decentralized, but the people operating the websites behind them and stuff. If they start to have to go through these kind of very regulatory intensive processes which achieve very little in terms of the end goal, then yeah, there is that risk. But I'm an optimist on that front, and I think that they'll let things play out for a few years until they start to regulate, and hopefully do it thoughtfully and minimally.
Yeah, definitely. Yeah, you echo our thoughts as well. So we've already done so much in terms of improving the existing structure. For example, Enzyme, you guys have basically taken the asset management model, completely ripped it to shreds and put it on chain, which means that people can immediately, within a few minutes, create their own vault strategies, customizable parameters without permission from anyone, which is fantastic. And they can do that in a completely transparent way that means that they can't steal users' funds. And on DeversiFi's end, exactly the same. Layer 2 is hard. The problem that we're solving is we're giving users essentially what they can get from a large centralized exchange in terms of execution, speed, markets, privacy, low fees. And we're doing all of that, but while inheriting and maintaining the security guarantees of the main Ethereum chain. So we're already doing so much that the existing industry can't do. The other thing that worries me a bit is just that regulators are going to treat this with a too broad a brushstroke. And I think the thing that I'm particularly worried about is if they make every single wallet need to do any sort of KYC. I think it makes complete sense to eventually become more regulated in terms of making sure that there's no money laundering, AML, etc. And that makes sense as the industry grows. But I'd hate to see everyone having to prove their identity and prove everything the moment they try and interact with anything on chain. I think that's crazy. So yeah, that's what I'm worried about. But yeah, like you, I'm an optimist. I think particularly the UK FCA, they're very open to innovative technology. I think the same is echoed around the world. But yeah, I just hope that they don't stamp everything out first before coming up with something that actually really helps the industry grow and the kind of the light touch regulation that it needs. Yeah, and I think so. The question that someone asked in Discord is, so you already briefly talked about Melon V3, but what's coming up in Melon V3, V4, V5, V3, right?
We call it a Sulu release. We didn't really put a number on it. It's I think it's what's coming after V2. With the Sulu release, so like one of the biggest pieces of work I think is like incorporating borrowing from within a vault. So like allowing a vault to take leverage, not just to lend. Another, in terms of integrations, we'll have integrations with curve pools. We'll have integrations with IDLE. We've just completed the Aave integration. We'll have integration with balancers, so like from the LP side, from the trading side, etc. And we also have shares transferability. We'll have vault ownership transferability, and we'll have this ability to expense gas to the vault. So those are, I think, most of them I covered in the chat already today. But we are pretty close to this release cycle ending. Actually, like we're hoping to go to audit at the end of this month, and that means that Sulu will already be released hopefully sometime in May.
Amazing.
And that means we'll already be able to think about the new roadmap and publish next milestones.
I've got a feeling it's going to be a pretty big summer for DeFi in general, as well as Enzyme. There's so much coming up in the next couple of months. It's going to be amazing. Where's the best place for people to get involved more in Enzyme, if they have questions or if they want to get involved more? What's the best way to get involved, contact you, get involved with the governance, etc.?
Yeah, so best place is probably our Discord channel, which is just Discord. Was it enzyme.discord.finance? I can never remember. But anyway, our Enzyme Discord channel or our Telegram channel. We're also very responsive on Twitter, and we're always open to anyone building cool things, new ideas, like people from the depositor side, people from the vault manager side, DAOs, treasury managers. People who are using suboptimal software that they're frustrated with and they want to explore alternatives, CeFi to DeFi, we're always interested in speaking to people in the crypto space who are doing interesting things and seeing how we can be helpful.
Excellent. Mona, thank you very much for taking the time out of your day to come on and have this chat with us. I would love to have you back. Have another catch up in a couple of months, maybe once V3 is launched. I think the industry will have changed completely by then, given the speed that everything's moving at. It'd be great to have you back, and keep up the good work. And thank you again.
Thanks for having me, and thanks for the questions, guys. Great to be here.